Hey, what's up, guys? Back with another video. Uh, we can call it like a midweek commentary. Just a couple trades that I took this week so far. We had CPI today. Uh, got my mic out from the corner, so hopefully it sounds a little bit better than my first video. Again, it's a learning process for me. That's my first time ever really doing any type of YouTube videos or anything like that. But a couple of trades that I took today, post CPI, were NQ and EU. And I also have a update on Lucid, on my Lucid Flex accounts. So I have 5 of the 50K accounts, and I also have 10 of the 50K accounts through Apex. So let's see here. Let me just go ahead and share my screen real quick. I also have a one-on-one session that I had with a student of mine. I'll probably add that towards the end of the video, going into more in depth of what I'm looking for and like an explanation of my trades. But you could see here at the 10 a.m. open, we had a sweep on NQ. We traded back into this up close candle here. We had a nice 15-minute sweep as well as a market structure shift going into 10 a.m. So I was just trying to catch a 4 hour power three. So open high, low close. You can see here, right after the sweep, I sold, took some partials in here, and got back in for another trade since we were in a breaker. And I was targeting this low in here, letting my students know. Let's see, right? Sold, took some a partial here. And let me actually see if I can share my actual Google Chrome. So this is my Lucid dashboard, right? Krishna Segura. Not going to show you guys my credentials, but I have 5 of the Lucid Flex accounts. They are funded. I am on day 4 of 5. So I've made a buffer of 4,260, and the max withdrawal is about $2,000 for the 50Ks. So I'll be eligible to withdraw, give or take, $2,000 per each account. So good $10,000 right there. I just have to hit one more day of a minimum profit of 150. And then if I were to show you guys trade SIA, um, so far on the month of March, this is the second week, combining all of my accounts, I'm up 21,000. Don't really have that big of a win rate. You really don't need that much, that high percentage of a win rate. Honestly, I mean, if you know what you're doing. But I can show you guys my entries here. And the reasoning behind it was because of, let's see here, this daily time frame. Let me just reset my chart. We had SMT with YM as well, but I was going based off this daily candle here, this up close candle, and how we traded yesterday into yesterday's previous day high and close back within the range. I was looking for price to trade lower. I'm anticipating a hourly market maker sell model. So I'm looking for these lows in general. But I mean, right now we're just kind of ranging barcode. So like typically in these types of scenarios, you're looking for like previous session liquidity. But like I said, I'll be going over this whole markup that I had with NQ and EU as well. Let me show you guys my trade of eight as well, just to be as transparent. I have 10 of the 50Ks as well. Those are sitting at 1,800. You can check out my performance center, right? I mean, my win rate is 36%. So like I said, you don't really need that high of a win rate to be able to compound, your accounts. So overall, the month, if I were to probably try to get a buffer for Apex, at least up to 5,400 so I can do the max withdrawal with Apex. So looking to do $2,000 per each account, as well as solidifying this payout with Lucid. So I'll keep you guys updated. I guess my thoughts for the rest of the week, I'm probably going to be looking for lower prices on NQ and same with EU. Um, I think they're playing out a higher time frame market maker sell model. But like I said, I will go ahead and upload after this. Probably just put it all together. My one-on-one with one of my students. So, but yeah, I'll catch you guys in the next video. Thanks for tuning in. Peace.
Can hear
There
you.
you go. Perfect. So how was your trading day today?
Hey, I'd say it was pretty good.
Yeah.
Yeah, no, I'd say it was pretty good, man. We learned something today, so that was good.
Perfect. Well, let's see. Let's do a recap of YM, right? So you ended up trading YM versus NQ, correct?
Yes.
And what could you, if you were to explain to me exactly what your thought process was prior to 9:30 open?
Okay, so let me go ahead and open up my trading view here just so I can it's always better when I'm looking at it.
Yeah, very good.
Uh, Alrighty, so YM. Okay, so first thing going into the charts, I'm obviously looking to see if we ran any highs or ran any lows.
Okay.
Um, I saw that NQ. I looked at NQ first. Saw that NQ took out the London high, and then I looked at YM and then ES. Saw that they didn't take out the highs, and obviously that's before learning that that's SMT. Um,
Right.
but so I'm like, all right, oh, and I just off the bat, I just knew obviously since NQ took out the high that it was going to be the stronger pair, so I knew that YM and ES were going to be weaker.
Correct.
Um, so then I go to my 1 hour, see
Okay.
if I have an hourly fair value gap. All right, cool. I got an hourly fair value gap. Um,
Which was at 2 a.m. and 4 a.m., correct?
yes.
Yep.
And so I went off of that fair value gap and then I dropped down to, so I marked out my fair value gap there, saw that we were kind of, you know, touching in that range. We traded above it a couple times, but we kept going down below it. So I'm like, all right, it wants to, obviously it's disrespecting this fair value gap and wants to go lower. Um, so then I go down to my 15 minute, see if I can get a 15 minute fair value gap. Ended up getting that fair value gap also around 4:30 a.m. to 5 a.m.
Okay.
Little
Yeah.
tiny one. Um,
Yeah.
and then as the morning moved on, at 6:30, we were able to get that fair value gap there. So then I marked out that fair value gap as well. Saw that okay, now I'm basing off of the 6:30. So right there, yep. And then saw that we're tapping into that range as well, but then going lower.
Mm-hmm.
So now I have that one marked out on the 15 minute. Then I dropped down to my 5 minute. Saw if we had a 5 minute fair value gap, which we did at, where's it at? Which one did I go off of? I want to say I went off of the one at 6:30 again. Yeah, so I went off the one that we at 6:30 again in the 5 minute or 6:35.
35. So in here.
Yep. Went off of that little fair value gap there. Saw that at the open, we went into that fair value gap and then closed below it. So then just off of that point, I was just like just confirming that we're touching all these fair value gaps and going lower
Mm-hmm.
um, is what I base my bias off of. And then, I mean, pretty much I put my entry in at around like the 9:30 ish, um, and then capitalize on that massive dump.
Right in here at 9:30. Yeah.
Yep.
So if I were to break this down for you real quick, Um, Obviously, starting at the higher time frame. Let's just delete everything. Just kind of walk you through it.
Yeah.
So YM, we can see here, right, on the daily, took out these buy stops here, right? And then on the daily, we finally broke a daily structure here, right, after taking buy stops. So we can just go ahead and write here buy stops. And then we also have this inversion fair value gap on the daily that we ended up retesting multiple times here. Okay. So if
Mm-hmm.
I were to zoom out, we have all of this failure swings here as like resting liquidity and overall this low here. So to me on the daily, this looks like a market maker buy model into a market maker sell model. So now we're no longer on the buy side of the curve, right? So this is the buy side of the curve. This is the
Yep.
sell side of the curve. So now we can start to target these lows here as draw of liquidity, right? We have these lows in here, and overall, this is our objective. So when we drop down from a daily, we're going to go from our daily to our hourly, which is our time frame alignment. So on the hourly, well, let's see if we can find a dealing range here, right? On the daily, we had taken out all of these lows here, right? So once we've
Mm-hmm.
taken out these lows, we come back into internal range liquidity, which is right in here. So this is going to be our internal range liquidity, and we're going to be targeting this low here, as well as this low here. So we've taken out all of these lows, created a dealing range on the daily, dropped down to a 4 hour. Looking at the 4 hour, we swept these highs here, which on, I believe on the hourly are relative equal highs. Yeah, they are. So right here, right? So we can call this relative equal highs. And think of it as, okay, we finally hit a key level on the daily. All right, so if we were to go from our dealing range, let's see here, from this low, let's say to this high, right? This is our dealing range on the 4 hour. So from this high to this low, we have this higher time frame key level where it makes sense to look for shorts because it's a daily key level. It's a fair value gap. So we want to see price consolidate and have a market structure shift on a lower time frame here in order for us to trade it all the way down to here, right? So if we drop down to a 4 hour, let's say, let's take a look at the 1 hour. So right in here, we have what looks like a market maker buy model. So we have original consolidation, low risk buy, first stage, second stage. We are trading into that key level. And we finally break structure on the hourly right in here, right?
Mm-hmm.
So let's say we broke this level here. So now obviously we let this kind of play out a little bit because this is going to be our low risk sell and we're going to have some type of SMT in here. So when we put YM and NQ side by side, it's going to look a lot different because here on YM, we have a high here, right? If we look at NQ and that comes in at 2,300. At NQ at 2,300, we swept that high. So we now have
Mm-hmm.
officially have some type of SMT between NQ and YM. So that's the first stage of a market maker buy model and a market maker sell model. We want to see that SMT and a low risk sell or a low risk buy, depending on what you're trading, right? In this case, we're trading a
Right.
market maker sell model. So we're looking for that low risk sell and then another leg of distribution to the downside. So YM, we get that, right? We didn't run this high. So we have SMT with YM, meaning that YM is probably going to reach our objective a lot quicker than NQ. So this right here is SMT. So we can mark that up. And on the hourly now, once we've broken this low and have created a new low, And a low is considered of a swing point, right? So candle one's low is higher than candle two's low here, right? And candle three, depending on how this closes here.
Right.
We traded back into what do we have here on the hourly? We have this up close candle here, right? Order block. If we drop down to like a 30-minute, we have this inversion fair value gap here that we traded through, came back, retested it, could have sold there. We dropped down from a 30 to like a 15. What do we have here? We have a fair value gap in here. So now we have a new 15-minute dealing range, right? After finally closing below this low here, we have this high to this low. So if I go from this low to this high, this key level on the 15-minute time frame is going to be the same thing. We're changing from internal to external now. So on the 15, since we're using a 15-minute key level, we can drop down to a 1 minute. You're going to see a market maker buy model, right? Consolidation, right? This is the buy side of the curve here. Until we reach this gray box here, that's when we start looking for, okay, where do we finally break structure? So we have a run of this high here. After running that high, we have an inversion fair value gap. It's very small, but you can see it right in here.
Mm-hmm.
Make that red, right? Finally closed through it, came back, retested it, sold off, broke this low in here. So now, have we reached our objective yet on the 15? No, we haven't. So now we can start to look, okay, well, there's a reason why price hasn't reached this low yet because we just broke structure, right? So now we're looking at what could we possibly look for as for opportunities to go short. Well, we have a 3-minute fair value gap in here, as well as a high, a low, a higher high, a break. So this is a breaker. So we can mark that up here. Color this a different color. Let's do like yellow or something. Breaker.
Okay, so that's what an actual breaker is when you have a high, a lower low, and then a higher high.
Right, because it's that M formation, right? So
Got you.
the breaker is a high, a low, a high, a break of this low, and a retest of that low. So you're looking for this sweep here, right? And that's what's here, that sweep. We
Yep.
swept it and then sold off. So now that we've swept it, this high to this low is our dealing range. So we want to look for price to trade back into some type of premium level. So what do we have? We have a 3-minute fair value gap in here. We also have a breaker, right? Because these down close candles were acted as support. Now they are being rejected. So now you're it's like fitting like pieces to a puzzle, right?
Right.
Trying to figure out where like ideal entries would you know I guess like you're trying to look for like ideal entries now, right? So like it
Right.
makes more sense to like to sell in a premium versus in a discount. So like for example, right? Like if we were to like I'll show you so NQ, right? On the 15, when we sweep a high, so if we look at the hourly, right? And candle closure is something very important too. Let me turn off this power of three because it's cluttering everything here. So we have this high here, right? And
Mm-hmm.
overall on the hourly, it's not too clean. It's pretty barcode. So
Mm-hmm.
sideways price action. But going from the overall higher time frames, the reason why I was looking for shorts today was because of how the daily candle closed on Tuesday. We closed back within the range. So for me, closing back within the range after this high resistance liquidity run, I'm still looking for this low here for a target because on a lower time frame, I'm looking for a market maker sell model. So going from a daily to an hourly, you can kind of see, right, the buy side of the curve, right? We took out these highs here. We've been
Hmm.
consolidating, right? We had S&T with YM, and after taking out this high, this low becomes my target. So on the 15, you can see, well, let's see, 5 minute. We had these highs here that we took out during New York AM. Where's that?
Hmm.
Move this out of the way. So during AM session, what happened? If I were to look at this profile today, New York created the high of the day because we took out
Yep.
Asia and London. And what I love about New York is it's either it can do one or two things, right? It's either New York reversal or New York continuation. In this case, New York reversed and sold off. It took out London high and Asia session high. So it took out previous session high and another previous session high. And in here is a market maker sell model if I drop down to a lower time frame. So if I break this down from a 5 minute to a 1 minute, right?
Yeah, I mean, you can even see the information.
Oh yeah, you can. So these highs here got swept here, right? So you can see, right? We have original consolidation, low risk buy, first stage, second stage, into a key level. We finally break structure right here, right? Go to a 5 minute. After breaking that structure, what do we have? We have a low, a high, a lower low, a higher high, breaks, right? Breaks below this low here. This becomes a breaker, right? Candle bodies, if price comes back into that, it's going to act as resistance, as well as what do we have? We have this 5 minute fair value gap, right? So it's a key level. Breaks below, comes back into what? Another 5 minute fair value gap. We can mark that up here. What am I targeting? On the 3 minute, I was targeting this low here. As soon as we get that, I'm out. And I can show you, let me see here, share, trade C. So you see here, right? I go to the 5 minute. You see how we ran these highs?
Yep.
Okay. After running that high right here, we get this bearish candle here that engulfs this up close candle. I'm selling the next two candles there. So I sold this candle here because on the 1 minute, it's a little bit more cleaner. You can see I sold right here after this bearish candle because we also have a 1 minute inversion fair value gap when we closed right through it. So then this next candle, when it traded back up into these two up close candles, I sold. And my stop loss was literally right here. And I started to trail it down once we started to trade lower. So you can see here, right? Sold three positions here, sold another position here, took profit here. Why did I take profit here? Because we have a low here. So I'm paying myself something here, right?
Right.
Then it drops some more, comes back up into what? We have a fair value gap in here. Okay. Come back into this fair value gap, drop, paying myself something more. Okay. Now on the 5 minute, that's all right in here, right? We finally broke structure on the 5 minute, which is this low here. Sweeping this low, now we have a new dealing range on the 5 minute. What kind of what's it called? Entries can we base on off of this leg here. So we have a 5 minute fair value gap in here. So this is a point of interest. We also have this breaker in here, which can be, no, yeah. So we have a breaker in here, right, where price could accumulate and then sell off. So you can see, right, we had this up close candle as well. And now you can see where my entries were based off of. So I sold one small position in here, and then I sold another position in here because I saw it come into this up close candle here. So if I drop down to a 1 minute, this 5 minute breaker is also a 1 minute breaker too, like high, low, higher low, higher high, break comes back into this up close candle, right? You could have sold here, put your stop loss above this high, target these lows here. See where my take profits are? It's at
Mm-hmm.
an old low, as well as if you look here, right? This is the buy side of the curve, and this is now the sell side of the curve. This is the sell side of the curve, right? So if we were to just move this over this way and just focus on the buy side of the curve, this is original consolidation. This low here, these lows here. Let me, not on, there we go. This low here, this low here are all going to be used on the sell side of the curve as objectives. You can see where I took my profits here. Boom, 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 boom. And if I would have held like my last runner instead of taking profit here, then I would have, taken profit here and here. But now after seeing that, like after that, I was done for the day. I wasn't interested in PM session, wasn't interested because I made my profit, right? I compounded
Right.
my entries up here and made my profit here and called it a day. Market makers, market makers sell my, oh my God. Anyways, but yeah,
Monday.
yeah. So, this is kind of what I like look for going in and out of a trading day. It's got to make sense. It's like, where are we at? And then looking
Right.
at other pairs too. I also shorted, well, actually, let me see here.
Did you short ES too?
No, I shorted Euro USD.
Okay.
So I'll go over Euro USD real quick as well. So Euro USD is 6E, and it's just going to be a more so on a higher time frame. So looking at a higher time frame, I'm going to delete everything. So same concept, right? Actually, let's just start from the monthly. Damn. So when we look at this, right, we took out these highs here, right? So the market can do one or two things, right? Either trade from external to internal or from internal to external. We took out external range here. So after taking out external range, where do your eyes navigate to?
The lows.
The lows and then some type of internal range liquidity, right?
Yep.
So that can be either this fair value gap in here or this fair value gap in here, right? Drawing our dealing range on the monthly from this low to this high. Using this, does it make sense for us to look for buys in a premium or in a discount?
Definitely in the discount.
Right. So anything that's above 50% is going to be a premium. Therefore, we should be looking for on the lower time frames opportunities to go short. So if we go to the monthly, I'm gonna get rid of these boxes here and I'm gonna put just a straight line here. So this is going to be our first objective because this is a monthly fair value gap and it's right below discount. So this is going to be my draw. So we're going from external because you can see here, we even took out this high here, external range, right? We took out this high here and closed below. So going from monthly to now to daily, that's right in here. So now I can have an overall long-term bias that I would like to see a run of this low here. Now the daily has to tell me that it wants to short, or I have to have some type of opportunity to go short versus going long until we get to this low here. So that means I need a daily market structure shift. So here, we took out this low here, and we finally inverse this daily fair value gap here, right? So we had this daily fair value gap that traded through it, closed below it, came back, retested it, and then sold off. So now we have this new daily dealing range where we have this fair value gap in here, as well as possibly price could have traded back up to this high, but now dropping from the daily to a 4 hour, we can see on the 4 hour, we took out this high here, right? So we took out a form of buy stops. And as soon as we took out that buy stop, we took out a 4 hour low, candle 1, 2, and 3, which was right here, right? We took this low out. What happened after taking out this low? Created a 4 hour swing formation into a higher time frame key level. So we had this up close candle here. So this is our 4 hour order block. Right? So 4 hours, now 15.
Hey, y'all did a quote for these gutters. His name is Justin Rickard, right?
Does he want it done?
Yep.
Cool.
So, does he do a presentation?
Nope, we'll just set it up.
Just set it up?
Yep.
Okay. So, do you need to talk to
Yeah, we got to talk to Javier first.
Talk to Javier?
Yep.
And then do it? Okay.
Yep.
Okay. All right, I'll just tell him that I'll have to come back with an answer.
Yeah, just tell him we'll look at our schedule, see what's happening. We'll give him a call back when we have an answer.
Okay.
Yep. All right, go ahead.
No, you're good. So on the daily, right, we're going from internal range, right, some type of key level. In this case, it's a daily fair value gap. So we're going from internal to external. Now going from internal to external, we have this sweep of this high going to an hourly. You can kind of see, right? If I were to put a horizontal line, or not a horizontal line, a vertical line, right in here, you can see the buy side of the curve, right? The buying pressure to that higher time frame key level. Once we reach that, we have to have some type of SMT. And I'm pretty sure this high and this high was SMT with, where is it at? Yeah, right in here with GU. So remember how I told you that
Oh yeah, I already see it.
right here?
Uh-huh.
So we have SMT with GU and EU. So GU and EU are the same as like ES, NQ, and YM. Like when they're supposed to be correlated. So this right here is the market. It's the market telling me, hey, GU is weaker than EU. So which one's going to make it to your objective quicker? It's going to be GU. So EU has more strength than GU. So you'd be looking to short GU. And either way, I mean, you have S&T, which is the first. This is what you want to see, right? Once you have the
Right.
S&T, now you can have that S&T leg right here from this high to this low. Look what we trade back into. We trade back into this hourly fair value gap, right? So this now becomes a key level on the hourly that we trade back into. And unfortunately, I didn't trade this during London session because taking a look at the economic calendar, we had CPI. So I typically don't try to trade the session before New York because we have, high impact news. So I kind of wait
Right.
for CPI to be released. Today, this was like the first time I've ever witnessed CPI really not do much at 8:30. I mean, it just kind of traded lower. And then at 10 o'clock, we had a run on stops here. So my overall bias on the higher time frame is bearish. So whenever I see price trade higher and it takes out a high, but then it closes back within the range, that to me is a run on stops. It's letting me know that it's trapping buyers in order to draw price lower. Because if I go to the hourly, we have these lows here, as well as these relative equal lows in here. So this is going to be a draw. This is going to be a draw. And overall, this daily low becomes a draw. So if I go to the 15-minute time frame, you can kind of see, okay, so like let's turn on this ICT kill zones, right?
Right.
Asia, Asia's high and Asia's low got taken out during London, right? So
Mm-hmm.
breaking down the profile for today for EU, London created the high of the day. Going into New York session was a continuation of London. So we had a bearish sentiment for London going into New York session. We traded back into some type of key level. In this case, it was a run on stops. Let me see here. Was it? We also had this inversion fair value gap on the hourly.
Worked just
Traded
perfect for me.
into, as well as a 4 hour fair value gap too. So at 10 a.m., we traded the power of three at 10 a.m. So that was this 4 hour fair value gap.
Valley plus 2.
So this next 4 hour candle, I'd like to see price take out this low here, as well as this low here. Because I'm thinking London created the high of the day. But with it being a Forex pair, probably won't have much movement. But going into Thursday and Friday, I'm looking for continuation to the downside. As long as we don't take out this low here. And taking a look at the daily, it's a bearish candle here. So we have candle one, candle two, candle three expansion. The next candle, I'm looking for an open. This is what I'll be looking for tomorrow. Open, trading higher, trading lower, and then a close, which is a bearish candle, right?
Right.
So, but yeah, that's pretty much just the breakdown. And then taking a look at the entries that I took. Let me see here. Where is it at? Mm, second here, let me pull them up. So you can kind of see here, right? Um, this was after the run on stops here, where I shorted Euro USD as well. Can you see my screen?
Yeah.
So that was after that run. That happened here. So like you're looking for either a run on stops during New York session or a lower high or a higher low or a run on, a previous low as well. So that's why it's always nice to have, going into the market prior to 9:30, mark up your most recent 15-minute swing high or 15-minute swing low and see what gets ran out. And then if on the lower time frame, if we have a market structure shift with like either a breaker or just a typical return to an order block or a fair value gap, that's typically like what I'm looking for. Not trying to
Right.
overstate anything. I mean, you've noticed like, it's just like, oh, like let's take a look. What did London do, right? For NQ or ES,
Hmm.
YM. Let's take a look at the previous session. Like, did we take London high or like, during New York, or did we take out Asia range high during London? And then, are we going to return into like a discount or a premium? It's just always, I guess it's like a bias. You're like formulating like some type of, entry pattern,
Right.
not trying to make it too complicated for you, but just trying to show you like some type of step process.
Right. Yeah, absolutely.
So, going into the rest of this week and probably the rest of this month, NQ, I'd like to see 2400, going maybe tomorrow. We could probably probably look for this low. So as this low here on the hourly. Let me delete this here and this low here. So these are going to be my draw for going into the rest of the week here. And if we take a look, where is the weekly open? The weekly open is right here. So we're still above the open. So if I turn this
Right.
on, power three for the weekly, notice how we opened here, traded lower, made the low of the week, and then we traded high into some
Hmm.
type of key level. So now anything above this open is going to be manipulation. So depending on how we close here for the week, it is already Wednesday. So let me see the daily time frame here.
But now we're looking for distribution.
Right, we're looking for price to now trade lower. So with Monday, you creating a range, right? A low and a high. Tuesday creating the high of the week, and Wednesday reversing from Tuesday, then we can expect Thursday and Friday to trade lower. So going
Right.
into New York session now, Thursday and Friday, we're going to pay attention and see what happened during London, right? And if we have either New York high of day or a continuation of London to the downside. So now we have objective.
Right.
So depending on how this day closes, right? If we take out previous day low and we close below previous day low, our next objective going into Thursday is going to be Wednesday's low. And then same thing for Friday. We're going to look for Thursday to take out Wednesday's low, create a new daily low, and then target that low until we get to our objective, which is this low here.
Got you.
But yeah, yeah, I mean, that's pretty much it, man. Any questions?
No, man. Like I said, I just keep learning every, one thing at a time, and I'm getting there.
How do you feel? Do you feel like you're grasping things?
Yeah, like I said, like I just like it just I try to take some at least one thing away from every session. So like now I know what a breaker is too now, you know what I mean? And like now the market maker sell model, like I'm able to actually see that now and like like things like that. So It's just more identifying things to, just more things to look at and more things to add to my steps.
Yeah, so there's going to be a lot more stuff that I'll be adding, as well as like what I use on a day-to-day basis, and that's going to be, in the coming of like, well, once you grasp something and like once you get like the hang of something, then I can start adding things. Like, for example, like, let me see here. So this M15 sweep here, right, on a lower time frame, it's a market maker sell model. So if I were to measure, let me turn this off. Where's that? Fibs. From this high to this low. We now have standard deviations, right? So now I'm looking for this to trade lower into like -4. That's going to be my projections. So like if I try to find,
I charge you that one day. That box. It was on my board.
like this price line here, right? Point A to point.
Maybe I remember you plugging it up, but I didn't see that you were. I just assumed you took it.
You need it? I have one.
Yeah,
Yeah.
I want one.
The charger?
Yeah.
Yeah.
I see charger.
Yeah. I kept the one today, or that one that you gave me.
Mhm.
So, but anyway.
I can hear you.
No, you're good. So we have this high.
I took all that paperwork out, right? Robert,
This high, this
With all the paperwork.
break.
well, that one paperwork, right? The insurance one.
That wasn't Robert, was it?
Yeah, Robert.
No, that
Now
was
notice
not.
how this is my standard deviation
No. This
here
one.
because we're going from
Oh yeah, that one. I thought you meant the.
This one. No, not that one. Not that one. She want to know if it's certainty climax flex. You could go eat, but we can do it later.
going from a market maker buy model into a market maker sell model.
Mm-hmm.
She just want to know, is it climax flex?
Once we reach like -1, you'll see on a lower time frame that we go back into some type of PD rate. So like -1, we have this.
Yes. What it is, 17 North Gates. It's not
climax flex.
I don't know what the hell that is.
And then he's not gonna get a
5-minute fair value gap after capping -1.
Because she wanna, because it's not
Then
climax
we get
flex.
to take it from -1 to -2 to 2.5, which is what we have.
I don't know what the hell that means.
No, ask Tyler about that. That's weird.
Right.
Okay.
And then same thing, you still have your fair value gap that it taps.
That's what she called.
Right in here, 5-minute
Yep.
right here. Because we could possibly see this trade lower all the way to like -3 to -4. So after it taps this 5-minute fair value gap, it trades lower into -3.5 and 4. So allowing this to play out, right? Finding your manipulation, because typically what it is accumulation, manipulation, distribution, right? Letting this play out and letting price trade lower to -1 to 1.5, and then trading this part of the market maker sell model. Because have we reached our objective yet, which is this low here? After trading into -1 to 1.5? No.
No.
Right. So now we're trying to look for opportunities to go short and target these lows here. So that's how we can use standard deviations and these key price points to now formulate some type of entry pattern based off of these levels. And so like if we were to short at this fair value gap and put your stop loss right above the key level and target this low here, that right there becomes a 9R. Now say we took it, hold on, right here. Yeah, 9.5. And then if we pyramid another entry off of this 5-minute fair value gap, right, bring this stop loss maybe to this high here.
You don't have to sit around here. Get over around.
This is how you can pyramid entries too, by shorting here, break even, looking this right here to pyramid another entry, right? putting your stop loss above this high and still targeting maybe the 3.5 here.
Right.
So that could be your 2 winning trades here, just based off of a
Right,
higher
I see.
internal to external. Same thing in here, internal to external.
You guys in here?
We're coming.
But yeah,
But, all right.
I'll let you go.
All righty, man. No problem. So we'll talk more. So
Perfect.
we'll see what happens tomorrow.
Yeah. We'll take a look.
But all righty, man.